I've never been more bullish on crypto than I am for the second half of this year. So I think this is a good chance to let people know, sort of the reasons behind that bullishness and why I'm so optimistic for what to come. It's been remarkable to see institutional investors wake up to crypto. I think that's attributed a large part of it. And of course, we've had the launch of ETFs, which have made it so much easier for investors to come into this space. So if Bitwise is a proxy for institutional interest in crypto, you can say that that market's grown, more than 10x in the last couple of years.
And I think a combination of the institutional engagement, more and more firms and advisors engaging, coupled with a massive change in the administration's viewpoint, the run up in price of Bitcoin, all of that is adding up to your comment of why you're so bullish. What's going on right now? What's your outlook for the rest of the year?
Yeah, we're very optimistic for the rest of the year. Look, you have a trio or maybe four or even five positive tailwinds pushing crypto forward. You mentioned one, which is the sea change in the regulatory environment. That started with the November elections, but it's accelerated throughout this year as the new Congress and the new administration has delivered on its promises. And those include pulling back all the SEC's lawsuits, which were against the crypto industry, allowing for crypto firms to have banks, moving forward on stablecoin and market structure regulation, establishing a U.S. strategic Bitcoin reserve. Regulation was a huge force facing crypto for the previous 4 years, and now it's a massive tailwind. But it's not just that. You look at other things. We're seeing a one-time asymmetric entry of institutional capital into the crypto market. The Bitcoin ETFs were the most successful ETF launch of all time last year, attracting $36 billion in assets. One of our predictions for this year is we're going to exceed that, and we're seeing inflows into Bitcoin ETFs dramatically accelerate. So you have institutions buying, you have a positive regulatory development, and now we have this third major force, which is enormous optimism about stablecoins and tokenization, which is lifting up assets like Ethereum, like Solana, like Chainlink. So if it was primarily a Bitcoin story in H1 and in 2024, it's now a broad crypto story across Bitcoin, Ethereum, Solana, Chainlink, crypto equities, and more. It's just really hard to find a reason to be anything but very bullish. And I think that's why we're seeing prices hit new all-time highs. I think it's why we're seeing strong inflows even during what's usually a slow summer season. And I think the fall is going to be very exciting for crypto indeed.
So if you had to cut it all down to a single bold call for the rest of the
Mhm.
year, what would you say?
Yeah, Bitcoin over $200,000. I think that's our
Goodness.
highest conviction bet. We're at
Wow.
we're at about $113,000 now, but as you and I have discussed, there is this structural mismatch between demand and supply in the Bitcoin market. The Bitcoin market only produces 165,000 new Bitcoin each year. Corporations like MicroStrategy and its peers have already bought close to 300,000 Bitcoin. ETFs have bought somewhere north of 100,000 Bitcoin, and flows are accelerating. There's just more demand than supply, and if that happens, the price has to go up. We've already seen it so far this year, but I think we're accelerating. So Bitcoin 200K would be the cleanest call and probably our most high conviction call here at Bitwise.
So if you were shocked, give me an upside and downside to that 200,000. What's the worst you would be amazed at or the highest you'd be amazed at?
Yeah, I think on the upside, you could see it move past that into the 250 range if you get an extraordinary series of events. I imagine there are tail events that would push it even higher than that. And of course, Bitcoin is hugely volatile. We regularly see 20, 30, 40% pullbacks. So you could see it retrace down to the, 70 to $90,000 range. But I don't think that's likely, to be honest. I think we're finally escaping the gravity of $100,000, which has sort of been where Bitcoin has been pinned for the past 6 months. And I think as we do, we'll start to move up toward that $200,000 range. But of course, there are tail events on either side.
You cited, as I did, the regulatory legislative environment. What a sea change from the Biden era, now in the Trump era. What's the latest that is happening on Capitol Hill?
Yeah, we're really watching three things. So first you have the stablecoin bill. The stablecoin bill would put stablecoins, which are US dollars that move over the blockchain-based rails, on a firm regulatory footing. If we get passage of that bill, which has already gone through the Senate, where it achieved, I think, 68 votes, one of the most popular bills in Congress this year. That's an important fact. Crypto is actually a bipartisan issue with support from Democrats and Republicans. It got 68 votes in the Senate. It's now with the House, and then it will be signed into law. That will bring a huge amount of institutional interest into the space. So we're watching that progress. The second is the Market Structure Act, which would define more clearly whether the CFTC or the SEC governs crypto and what are the rules of the road. Having that in place will dramatically reduce the risk of future blowups in the crypto market, which have been a big headwind for crypto historically. The crypto industry has been asking for regulation because good actors know that they will thrive under a reasonable regulatory environment, whereas in the previous environment with effectively no clear regulations, you had things like FTX bubble up. So I'm optimistic that we'll get that through. And then from an investor side or an investment side, the SEC is looking to develop something like generic listing standards that would allow us to launch lots of different crypto asset ETPs and index-based ETPs more easily than we have in the past. And that just means that hopefully by the end of the year, crypto will have broad engagement from Wall Street. It will have a firmer regulatory footing with fewer blowups, and investors will have more choice in how to express their views on crypto. That's a pretty great combo, and I have a high degree of confidence that all three of those things are likely to happen from a policy perspective by the end of the year.
One of the things you have always used to talk about for years, I've heard you offer this commentary about what is come to be known as the 4-year cycle. We know that there's a Bitcoin halving every 4 years, and since its inception in the beginning of last decade, we kind of saw a consistent price movement, 3 years up, 1 year down, etc. And that has become just kind of the way Bitcoin is. Given that we now have institutional money moving in a pace we've never seen before, and new legislation and regulation that's allowing for the first time banks and brokerages to trade in custody, is the 4-year cycle still applicable to Bitcoin?
Yeah, I don't think so. I think it's going to be overwhelmed by those trends that you mentioned. As you alluded to earlier, you're talking about investors with trillions of dollars of capital making a one-time investment just to level up from zero in Bitcoin. We still have some of the forces that contributed to the 4-year cycle, whether that's the halving or interest rate cycles or economic growth cycles or, the buildup of leverage in the crypto system. Those still exist, but I think they'll get overwhelmed by this wave of institutional capital. We think we're not in a permanent super cycle for Bitcoin, and it will still be volatile. But we're optimistic that next year, which in the 4-year cycle would be a down year, is actually going to be quite a good year as these institutions move into this space. Look, there's still going to be volatility in the market, Rick. There'll still be pullbacks, but we think this wave of institutional capital is the biggest force to hit Bitcoin maybe since it started, and therefore I think it's going to dictate the market trends for a number of years.
With that, what's the impact long term on Bitcoin's volatility?
I'd argue it's less risky than it was 15 months ago when we had a harsh regulatory environment. So when an asset has lower risk, you would expect it to have lower volatility. An analogy I would make, and I was looking at this data earlier today, is to gold after we went off the gold standard. If you look at gold's volatility from 1971 to today, it went on a massive downward slope. It was extremely volatile in the 70s as the market was wrestling with what gold was and we were dealing with high inflation. And then it really declined into the late 90s before it hit its steady state run. I think Bitcoin is doing something similar. As it matures as an asset, as we squeeze the risk out of it, the volatility is coming down. It's less volatile than some Mag 7 stocks now. It's still a volatile asset, but it's not the Bitcoin of 2018, and it's not the Bitcoin of 2022. This is the Bitcoin of the ETF and institutional era, and that means volatility is going to be compressed a bit versus historical norms. Yeah, I think we're probably said goodbye to 70% drawdowns. And we'll still see 20 to 40% drawdowns for sure. You can see those in 30-year bonds in the right circumstance. So we will
We
see
see it in the stock market all the time.
100%. So we haven't gotten rid of that, but I do think we've shrunk that downside risk pretty significantly.
Why hasn't the price of Bitcoin risen much over the past 6 months, given the massive inflows into the ETFs as well as everywhere else into the marketplace?
It is the case that we've had these massive purchases by companies and by ETFs and indeed by governments that have been vastly more than supply. I think the answer, Rick, is behavioral, which is look, 95% of all Bitcoin is already owned. So these ETFs and companies were buying all the new supply, and then they were buying Bitcoin from existing holders who had purchased it earlier. And the reason we were trading sideways is we were right around a big fat even number, which was $100,000. And people are people. I think people were willing to sell some of their Bitcoin at $100,000. If you go on platforms like River, which is a tool many people use to make long-term allocations to Bitcoin, the largest limit order positions historically have been at $100,000 and $1 million, just because people are people. They may have bought Bitcoin when it was 10 bucks, and they're like, I'll sell it at 100K. And so you can think of what we've done over the last 6 months is working through that inventory of people who are willing to sell at the big round number of 100K. I think what you're seeing today is that demand is starting to overwhelm that inventory, right? We're starting to break away from the gravity of that $100,000 number. Part of the reason we said 200,000 is it's the next big round number. And we think it's going to be a gravity pulling people up there.
Michael Saylor has championed this. There are now, I think, more than 100 of these companies that are holding Bitcoin in their treasury. So talk about your view. What are these things doing? And your view, does this make any sense? Is this a viable opportunity in the marketplace?
Yeah, absolutely. Look, I think there are three things that these companies are doing, two of which are great, one of which is less great. And I'll leave you to choose how they balance out. So, on the one hand, they provide access in an equity wrapper. And in many markets, that's really important. A lot of people talk about Metaplanet, which is a Japanese Bitcoin treasury company, often trades at the highest premium to it net asset value amongst the competitive set. Part of the reason for that is it's very hard to gain Bitcoin exposure in the traditional Japanese market. And as a result, they're providing access. And I think that's interesting. They're also using Bitcoin's volatility and various capital tools, debt instruments to help build Bitcoin over time, the Bitcoin per share in the portfolio. I think that's interesting as well. And in the near future, I think you'll see these companies do things like lend Bitcoin, use Bitcoin to generate income, use Bitcoin as a productive asset. They're almost a permanent capital vehicle for a Bitcoin hedge fund like exposure. And I think that's interesting as well. The risky side is I do think, of course, some of these people are just hopping on the train. MicroStrategy, the best performing stock over many periods of time, and they want a piece of that action. Do I think we need 1,000 of these companies? Absolutely not. Do I think there's room for a handful of companies, particularly those that use Bitcoin as an interesting balance sheet asset to do interesting things? I think it's a completely valid expression. As you mentioned, we have an ETF that owns these, ticker OWNB, OWNB, like own Bitcoin. I think it is an interesting way if you want to play this trend because it takes away the individual security risks. But look, I think these are part of the market. I think there'll be many more, not just for Bitcoin, but for other assets as well in Q3. You haven't even seen the real wave yet, if you want to believe that, the wave that is coming. And I think they're both risky and interesting at the same time. And investors should, buyer beware, but it's an interesting space.